Thursday,
9.5.
July 25th, rolling through the week. Next week, those that watch this, those that are in the room, July 31st, second of the 2-day FOMC meeting, it will
9.5.
have an impact. 1 o'clock Central, the statement on rates. That's
9.5.
Wednesday, July 31.
9.5.
I have to say this, 78% chance they're going to do a quarter.
9.5.
The rest,
9.5.
22%,
9.5.
they're going to do half a point. Why is that important? Well, today, this morning on the 25th at 7:30, the ECB, which is our Fed in the Eurozone, wasn't as dovish as I think the market wanted. Well, how do we know that? Well, the euro spiked, which is hawkish when it's talking about the native currency to the central bank doing the talking or action is going to go in the way of the rates. And so if they weren't dovish and they were hawkish in a way, euro's going to rally. It did, and it did a lot. The indexes in Europe, like the DAX, is going to go down. It did. So the euro is going to go up. It did. The Bund's going to go down in price, up in rates. It did. And so this was all at 7:30 Central. Take a look. And then we got some pretty decent economic numbers here in the U.S., which good news is then treated kind of bad because it takes 50 basis point off the table maybe. But I think it was what we talked about in the room today is it was kind of a perfect storm of, number one, we had some downside to go because of an extended rally yesterday. So big pop yesterday. So there was some wood to chop, number one, on the downside. You had an ECB that wasn't as dovish as they wanted them to be. You got strong economic data and durable goods and jobless claims that might take 50 off the table. And we went down, and it kept trapping people long that didn't understand these fundamentals and how they were working. So then we go to 12 even, and we got profilers in the room, talked about a ledge on a profile for volume at around 12 even. And guess what? It worked for a while. And then what happens is, just like anything else, once it becomes support and recognizable that's obvious, then guess who plays it? Everyone. So when it's obvious is when you want to do the opposite. I was bearish, took a small loser, and then I came back with a small winner and screwed it up because there was a lot more downside that I expected. I just didn't stay on the team for. But what got me in the trade, I'll show it, but I'm going to have to replay it.
One quarter.
All right, let that load, and then we'll do it. But just imagine that 12 even area as a profile spot, and it bounces off, it bounces off, it bounces off, it bounces off. It's support, right? So now everyone who could see easy support says that's support. Well, how do you know? Look how well it's worked. So then what do? They play it. And when you get too many people getting long, buying support, what happens? It doesn't work, or it's a less likely chance of it working. Because when there's a lot of people buying support, there's a lot of longs. When there's a lot of longs, there's a lot of sellers somewhere. We're the sellers. They're upside looking to get out for a profit, and their sell stops below getting out of a loser. A lot of sells, a lot of resting sell orders to exit along above that's tied to sell stops below. We are going down. The sell stops are a magnet, and the passive sell orders above are like pressure. When you have that dynamic of a lot of longs, you create sellers above and sell stops below. The probability of going down is high. So your job, our job, is to find if there's a cluster of people stuck playing a support level that's not going to work anymore. Why? Because if a fifth grader could see it, most of the rest of the world could see it. If it's obvious, it's another word that you might be phrased as crowded trade. You want to be in a crowded trade? I don't. Shoot, I got to go back another minute. So this area was like 1375, 13 quarter. What had happened here was some edge zone buying came in and lit up green and then couldn't go up. And then that highlighted and qualified an entry for the downside to take 12 even out and then see what's below there. I think 9 even was a good target. So I get in, but was not patient, and for two reasons. So I took a small winner instead of a full winner because number one, I had just lost a little bit. You know what? I'm not going to go back to this. I'll just walk you through it. But number one, let me pause it. I'm not going to keep going back. This was the area. Where buyers come in right in here. And it was more or less right in here. And it couldn't go up, couldn't go up, couldn't go up. So good entry, as it looks like on paper. But it took a little longer than I wanted, so I got out too early. And guys in the room heard me gasp because the rest was easy, but it happens. There's a reason, and this is what's important about this highlight for the day, is not the qualifier, okay? Not the ledge that kept working, and it's just not going to work forever. It's the muscle memory, taking a loser on this idea here, okay, connected to me what I did there. So if I didn't play this idea here, I probably would have held it here. Does that happen to a lot of people? Probably. And it's going to happen. You just want to recognize it. Is the previous trade you took affecting your trade now? Maybe it affects not even taking a trade now because you're risk averse if you lost money on a previous trade. Everyone's going to be risk. It's always going to be tougher to take the next trade if the previous one was a loser. How much is it affecting? How many missed trades do you have after a losing trade? Not how many winning trades, losing trades you have after a losing trade. How many missed trades do you have after a losing trade? That would have been winners, but you talked yourself out of it because you were risk adverse. Those don't show up in any of your analytics. Doesn't show up on your statement because you didn't put it on. So you gotta find out how is a losing trade affecting even a big winning trade? How is one trade bleeding into the next? Am I trading in this zone where, hey, I'm trading this as the setup? I don't care what I did over here. I was supposed to do this over here. Even if I wasn't supposed to do this over here, who cares? This is over with. Next at bat. Professional baseball hitters are good at not letting the last at bat bleed into this at bat. But they're human, so when they go bad, when they're going bad, they're letting each at bat, if it's poor, bleed into the next at bat. When they're going bad, right? You got a new count. You struck out last at bat. You don't go up with an 0-2 count. You go up and it's no balls, no strikes, right? So you have to. It's a new at bat. Might even be a new pitcher. So that's what you got to recognize. And then this market had some nice downside the rest of the session. If you look at this is the downside coming into real strong weakness. It's like there's support here, but there's support you disqualify and not try to buy it looking for a rewind or a bounce all the way back here. Why? Because you know fundamentally why we're breaking. And you're watching the leader, which was the DAX early on because it was most sensitive to an ECB. So this was the breakout. Here was the ledge, profile ledge, and then it actually was an obvious support area. This is when it doesn't work. Wham. So trading is about finding the obvious, doing the opposite if you think the people who did the obvious are stuck. Think about that for a while and tell me that doesn't make sense.